Denison Mines Corp is currently trading at $3.08, showing a significant intraday gain of $0.20, which translates to a powerful 6.94% move to the upside. Now, the immediate reaction for most people seeing that surge is to simply credit the rising tide of the uranium spot price. The general belief is that as uranium goes, so goes Denison. But that's a surface-level take that misses the entire high-stakes game being played here. The reality is that today's jump and Denison's entire value proposition is far more tied to the complex de-risking of a specific, groundbreaking mining technique in the world's most valuable uranium district than it is to the daily fluctuations of the commodity price. The market isn't just betting on uranium, it's making a calculated wager on Denison's ability to execute a plan that could fundamentally alter the economics of uranium extraction in the Athabasca Basin. Let's unpack this. The common expectation is that you buy a developer like Denison, perhaps through your Fidelity Investments account or even using the Robinhood app, and you're essentially buying a leveraged call option on the price of yellowcake. If the price of uranium doubles, a company like Denison, with a massive, high-grade deposit in the ground, should theoretically see its valuation multiply by an even greater factor. This narrative is simple, appealing, and it's what draws a lot of generalist investors into the sector. It's the story you tell yourself when you're setting up a position through SoFi Invest and looking for that big multi-year winner. The reality, however, is substantially more nuanced. Denison isn't just a company with a resource, it's a technology and engineering firm attempting to apply an advanced mining method, in situ recovery, or ISR, to a geological setting where it has never been successfully implemented on a commercial scale. Their flagship Wheeler River project, specifically the Phoenix deposit, contains uranium grades so high that traditional mining would be astronomically expensive and technically challenging. ISR, which involves dissolving the uranium underground and pumping it to the surface, is the key to unlocking its economic potential. Therefore, every piece of positive news about their field tests, every successful permitting milestone, and every completed technical study acts as a far more potent catalyst for the stock than a simple dollar increase in the uranium spot price. Today's 6.94% gain is a perfect illustration of this dynamic. While the broader uranium sector is showing strength, Denison's outperformance is often linked to investor confidence in its specific path to production. The trading volume we're seeing is substantial, suggesting that this isn't just passive buying, it's active accumulation from participants who understand the specific value drivers at play. These aren't just retail traders, we're talking about sophisticated funds and institutional desks that use platforms like Interactive Brokers for their complex trading strategies. They are scrutinizing Denison's progress reports on the Phoenix ISR feasibility study. They are modeling the internal rate of return based on the company's projected costs, which are contingent on this ISR method working as planned. A small, seemingly minor update from the company about water flow tests or metallurgical results can send the stock soaring, completely independent of the commodity market. Many who are new to this space and looking for investment help might miss this critical detail. They see the ticker moving and assume it's all about the macro story, when in fact, the micro developments within the company are the real engine of value creation. An investor using a platform for self-investing needs to appreciate that Denison is less like a gold miner with a proven pit and more like a biotech firm in late-stage trials for a promising new treatment. The potential is immense, but the execution risk is not zero. This tension between the simple commodity story and the complex engineering reality is where the opportunity and the risk truly lie. The company's business model is centered entirely on its uranium projects in the Athabasca Basin of northern Saskatchewan, which is often called the Saudi Arabia of uranium due to its extraordinarily high ore grades. Denison's portfolio is extensive, but the crown jewel is its 95% effective interest in the Wheeler River project. project. This project is composed of two main deposits, Phoenix and Griffin. Phoenix is the one that captures all the attention. It's one of the highest-grade undeveloped uranium deposits in the world. The company's plan is to use the ISR method here, which, if successful, promises to be one of the lowest-cost uranium mining operations globally. The Griffin deposit, while lower in grade than Phoenix, is still a substantial resource that is planned to be mined using more conventional underground methods. Denison's entire corporate strategy for the past several years has been to prove, both to regulators and to the financial markets, that ISR is not just viable, but optimal for Phoenix. They have conducted extensive field tests and environmental studies, and the data released so far has been overwhelmingly positive, steadily reducing the perceived risk and contributing to the stock's long-term upward trend. Investors using Fidelity ETFs to get exposure to the nuclear sector should understand that while they get broad diversification, owning a stock like Denison directly is a much more concentrated bet on the success of this specific project and technology. Looking at the broader market context, the tailwinds for the entire nuclear fuel cycle are undeniable. The global push for decarbonization and energy security has put nuclear power back in the spotlight. Following geopolitical disruptions that have cast doubt on the reliability of energy supplies from Russia, Western utilities are actively seeking long-term contracts from stable, friendly jurisdictions like Canada. This creates a powerful backdrop for a company like Denison. They aren't just developing a mine, they're developing a critical future source of clean, baseload energy for North America and its allies. This narrative is powerful and has attracted a new class of investors who might be managing their portfolios through services like Schwab Intelligent Portfolios or other online investment platforms. They see the long-term demand curve for uranium bending sharply, while the supply side remains constrained after a decade of underinvestment. This supply-demand gap is the foundational thesis for the entire uranium bull market. However, for Denison, the question isn't just, will uranium be in demand, but rather, can Denison deliver its specific project on time and on budget to meet that demand? The company's past performance has been a roller coaster, mirroring the boom and bust cycles of the uranium market itself. But the current cycle feels different, driven less by speculative fervor and more by a fundamental reassessment of nuclear energy's role in the future. This brings us to the future outlook, where the real drama will unfold. The single most important catalyst on the horizon for Denison Mines is the final investment decision, or FID, for the Wheeler River project. This will be the moment the company's board officially green-lights the massive capital expenditure required to build the mine. Before that can happen, they need to accomplish several things. They must complete the final feasibility study, which will provide the market with updated and definitive estimates on construction costs, operating expenses, and overall project economics. They must also secure all necessary environmental and regulatory permits, a process that is rigorous and can be subject to delays. Finally, and perhaps most importantly, they need to secure financing for the project, which will likely involve a combination of debt, equity, and potentially strategic partnerships or offtake agreements with utilities. Each of these steps represents a major de-risking event that could trigger a significant re-rating of the stock. For anyone building a position in their individual brokerage account, tracking the company's progress towards these milestones is far more important than watching the day-to-day chatter. The risks, of course, are commensurate with the potential rewards. The primary risk is technical. While all tests have been positive, commercial-scale ISR in the unique geological conditions of the Athabasca Basin remains a pioneering effort. Any unforeseen technical challenges during construction or ramp-up could lead to costly delays and budget overruns. Permitting risk, while currently assessed as low given Canada's pro-mining stance, is always a factor for a project of this scale. And then there's financial risk. Building a mine of this complexity requires hundreds of millions of dollars. If capital markets become tight or if the uranium price experiences a sudden downturn, securing favorable financing could become more difficult. This is a topic of intense discussion among serious investors on platforms ranging from Fidelity to Interactive Brokers. They are constantly modeling the impact of interest rates and market sentiment on Denison's ability to fund its ambitions. Tell me in the comments below, what is the minimum long-term uranium contract price you think Denison needs to see before they officially announce a positive final investment decision for Wheeler River? I'm curious to see the range of opinions on that critical number. The opportunity, however, is what keeps investors engaged. If Denison successfully brings Phoenix into production, it will be producing uranium at a cash cost that is in the lowest decile of the global cost curve. This would make it incredibly profitable even at moderate uranium prices and exceptionally lucrative in a high-price environment. In summary, the narrative surrounding Denison Mines is a classic case of expectation versus reality. The simple expectation is that it's a straightforward, leveraged bet on the rising price of uranium, a story that's easy to understand for those new to online investing. The more complex and frankly more accurate reality is that Denison is a high-science engineering and development company on the cusp of a major breakthrough. Its value is being driven by the methodical